Let's talk tech stocks. I know, that's not what a lot of traders are focused on right now. Right now, a lot of traders have their eyes set on energy and commodity stocks. And this is because commodity prices have been moving higher over the past several weeks. There's also increasing concerns about inflation rearing its ugly head again. And when inflation rises, that can put pressure on the Fed and the bond market to raise interest rates, which can be good for energy stocks and commodity stocks, but bad for the indexes and particularly bad for risk-on areas of the market, such as tech stocks. But I'm not as worried about that narrative as some people. I just think if you're going to venture into tech stocks right now, you need to be very, very selective. I'll explain what I mean by that in a second. But first, I want to welcome you to the channel in case you're new here. My name is Justin Spittler. I'm a trader. I also write a free e-letter over at RiskHedge, and we have a trading room over at RiskHedge as well. If you like the content that you're viewing today, be sure to give me a like and a follow. I really appreciate it. And so, yeah, let's just jump right into it. The first thing I want to discuss is XLK, which gets most of the attention when people talk about technology stocks. It's the technology ETF. And here we can see that XLK is starting to look a little shaky. I don't think there's any major red flags, but we have lost some momentum. And you could make an argument that we're starting to build a top formation up here. This past week, we closed down 0.9%, and we closed below that rising 10-week moving average, which I think is very important for determining the intermediate trend of a stock, or in this case, an ETF. So is tech going to roll over? Is XLK going to roll over? Well, it's possible. And if it does, I think the first area you're going to want to watch is this primary support level down here, which is about 6% from where we're currently at right now. So a 6% drawdown in today's world would probably feel like the end of the world. I think you'd have a lot of bears coming out of the woodworks screaming that it's over, and that that it was the top of the market. We're entering a bear market where everyone's going to become homeless, and everyone's going to lose all their money. I don't know about that. I think we could potentially see a drawdown to this area, but we also might not, because when I look under the surface, I see a lot of areas within tech that are starting to shape up, tighten up, and start to show, honestly, some impressive strength that isn't really getting talked about right now. The final thing I want to say about XLK before I move on to some other charts is that this is basically 50% Apple and Microsoft. And Apple has been under tremendous pressure right now. It's really been lagging not only its technology peers, but SPY. I think Apple just is kind of having an identity crisis right now. It had plans to launch an electric car, and it got rid of that. An Apple Vision Pro came out to very mixed reviews. And now they're talking about, launching a series of in-house robots to help people with their chores or whatever. So it seems like Apple's a little lost right here, but there's other technology stocks that are looking really good. And we can see that when we look over at the RSPT ETF. So this is the equal weight technology ETF. So this in my opinion, this gives us a better impression of what's really happening within tech right now. And you can see that this looks much better. So we did close this past week down 1.5%, but we're still trading above that rising 10-week moving average. And when I look at this here, this looks pretty constructive. We just broke out to all-time highs recently, back in January of this year. So that's, breakouts of big bases like that are obviously bullish developments. And we had continuation on the breakout. And what we've been doing the past few weeks is just trading sideways and consolidating. And in my opinion, what we have here forming is just a little bull flag. We've been trading in this range for several weeks tight here, where we have allowed that rising 10-week moving average to catch up to it. And now I think this is setting up for another leg higher. We also see some constructive action when we look at the cloud computing ETF. So this is Sky with two Ys. Did close last week down 0.2%. But once again, we have very tight trading action up here. We're holding this key support level, which dates back to April of 2022, and we closed above that rising 10-week moving average once again. So overall, this looks really, really solid. I think this ultimately breaks to the upside along with RSPT. And if you have that, what we would have is you'd have some strength forming below the surface. So while XLK, might look a little wobbly right now, I would be very encouraged if we were to see Sky and RSPT, the equal weight technology ETFs, break out to the upside, because that means that we have participation in improving below the surface. And speaking of the mega caps, the Magnificent Seven, we've talked about Apple quite a bit in this video so far, but the other major component of XLK, actually the biggest component of XLK now, is Microsoft. And Microsoft to me still looks really, really great, much stronger than Apple. You can see after breaking out of this big base here, we came up, we tested those former all-time highs, we pulled back, built out another little base, had an advance, traded sideways for several weeks, built out another little base, had an advance, and then what have we been doing the past few weeks? We've just been trading sideways, allowing that rising 10-week moving average to catch up. And now, to me, this looks like it could be beginning its next leg higher. So this is very encouraging action from Microsoft here. And Microsoft, unlike the other areas of tech that we've discussed so far, the ETFs, it actually closed this past week up 1.1%. So really constructive action from Microsoft. Also, Google, which is technically a consumer, it's a communications stock, so it's not in XLK, but it's looking really, really good up here too. So you could see, put in this big base, had this big run up. We broke out to all-time highs, but then what happened? We had a potential false breakout, or at the time it was looking like a potential false breakout, and then it kind of confirmed that. We had a 15% drawdown in Google, but buyers stepped in after it came back into this big area of support here, and we got back on track. We had a nice bounce the past 4 weeks, and now we're back above that rising 10-week moving average, and we're close to closing at new all-time highs again. And so my opinion of Google is I think Google goes higher from here, because what happened? We already had a 15% drawdown, and bears had their chance to take this one out. They had their chance to knock this one down and cause a complete meltdown in Google, and they failed. And now we're back up to prior all-time highs. We actually at one point this past week, we actually got up to new all-time highs. We didn't quite close there, so this might need a little bit more time. We do have a gap up on the weekly that could get filled, but I think this ultimately breaks higher because we're in a bear market, and that's what's been happening. Another major Magnificent Seven tech stock we want to focus on is Amazon. Similar to Google, Amazon is not technically grouped as a tech stock. It's a consumer discretionary name, but it's tech stock nonetheless. It's a major player in cloud computing and online shopping. So for the purposes of this discussion, we're going to talk about Amazon as a tech stock. And you can see that we had this big, massive run up after really getting creamed for several months in a row, and now we're back up to former all-time highs, and we're testing this former all-time highs. In my opinion, I could see Amazon needing a little bit more time to get going, just because we've had this huge run up over the last few weeks, and what we've seen within this bull market is a lot of stocks will come up and test those former all-time highs, and they won't break out to new highs on the first attempt. It'll take a little bit of time. So we could get a rejection here that'll spook some bulls and get some people to puke their positions, and then I could see this running higher. Or an alternative scenario would just be we consolidate below those former all-time highs before ripping higher. Within the tech sector, if we're going to drill down into some sub-industry groups, one area of the market that I'm really paying very close attention to right now is software. I know semis, get a lot of the focus right now, and they have been getting a lot of focus within this bull market because of their importance to the AI megatrend, the AI revolution. But I think it's important to not sleep on software stocks here, just because they haven't done as well as semis as of late. When we look at IGV, the software ETF, it has a little bit more work to do relative to some of the charts we've already looked at today. So we closed this past week down 1.3%, and we're also below that 10-week moving average, which is this rising blue line here. But we're still trading within this tight range, and we're still holding this key support level here. So I wouldn't get too spooked about what we're seeing NIGV, because what happened here is we had this run up to former all-time highs. We couldn't break out on the first attempt, so now we just pulled back and we've just been consolidating below the key resistance level. And I think this is just an opportunity for IGV to build up steam, to build up energy before that ultimately breaking out. And the reason I'm leaning towards a breakout scenario here is because a lot of individual software stocks are looking really constructive right here. So Oracle, one of the largest software stocks. This is a $343 billion company that doesn't get talked about in the same way that a lot of software tech stocks do. It's kind of slept on, but overall, it's looking very, very constructive here. You can see it had this massive base here, broke out to all-time highs, and then we've just had, we've just been consolidating within this range going all the way back to June of last year. So about 10 months within this range. I think this name could need a little bit more time, maybe a few more weeks, maybe another month, building out this base here. But I think this ultimately breaks higher. This is really constructive action, because what we've had here is we've had this breakout to all-time highs, and we just built out a massive base above those late 2021 highs. So this is looking really constructive. But of all the names in this video today, I think this one needs a little bit more time. One name that I would also keep a very, very close eye on would be Salesforce. This is CRM, one of the biggest, most important software companies. What we have here is we've had a run up in the former all-time highs. We had actually, closed above those prior weekly all-time highs, but we couldn't really stick the landing. We didn't have the follow through that you would hope to see. So instead, what's happened is we pulled back, and we've just been trading several weeks tight. We closed this past week up 0.2%, and we're back above that rising 10-week moving average. So I think just give this one a little bit more time, but I think this one ultimately breaks out to the upside, and that's going to be very important for both tech and software more specifically, because this is a $292 billion company. So very important name to keep an eye on. Also seeing really, really constructive action from ServiceNow. ServiceNow is a name I've shared on my Twitter before. You can follow me over there at JSpitTrades if you're not doing that already. But this is a name that I've been talking about quite a bit as of late, and I just really, really like how this one's setting up. So you can see we closed the past week up 2.8%. We've ripped back above the rising 10-week moving average, and this name is just building out a base here after trading several weeks tight above its prior all-time highs. So this one's looking super heading into next week, and I think this one has leadership potential if we're going to see a rotation back into tech software, as there is a possibility that the energy commodities names, which have been running up like crazy as of late, if we see some rotation back out of there, and let those areas of the market, kind of set up for their next leg higher. NTNX is another name to keep a super close eye on. So you can see here, this one had a massive base that dates back to the summer of 2018. We just recently broke above it, and we've been holding that level on the breakout, trading, several weeks tight. And this past week, we had a really, really strong move. I don't think we quite closed that new all-time highs. Maybe we did. We got pretty close, but ended the last week up 6.9%. So really, really strong move, much stronger than what we saw with a lot of other individual software tech leaders. So the relative strength for this one is really impressive. And this big base, you just can't ignore the importance of a big base like this. So if we see continuation on this one, I think this one could run for not just months, but even longer than that. It's could enter a character defining bull market here that runs for a very long time. Another name you're going to want to keep a very close eye on is HubSpot, ticker Hubs. Another name that I've shared on my Twitter before. This is actually a trade of the week pick in my free e-letter over at Risk Edge. If you caught that issue, you might have gotten involved with this name, but similar to a lot of names discussed in this video today, what I liked about HubSpot was that it was trading several weeks tight and was not extended. That rising 10-week moving average is just coming up and acting as support. And what we've effectively had here was consolidation above a former high, flip that level into support. So that acted as a launch pad. In this past week, we had a massive move, a massive breakout. I think this actually broke out on Thursday on really, really heavy volume. And then we had some follow through on Friday. And so it closed at the highest level since it looks like, December 2021. So, really big move here. I think these former all-time highs at this point are calling Hub's name. And that's about 30% from where we're at right now. And the fact that this name broke out to new highs on volume, had a huge day, while, your individual ETFs such as Sky and IGV were still down on the week, tells me that this name has industry leader potential. So HubSpot, definitely a name to keep a super close eye on. APPL, this is actually a name we're long in my Discord group. We've been long it since it put in the space here. And this has just been an absolute monster of a stock. You can see the huge volume pouring in during its big run up. It broke out on strong earnings. This is an ad tech company that I believe competes with the likes of Trade Desk. And, Trade Desk is a name that I still see a lot of investors, traders, to get excited about. But, when bull markets change, when you go from one bull market to another, often new leaders will rise and emerge. And I think in this case, AppLovin is looking like the new go-to play if you're wanting to get exposure to ad tech. To me, this name looks like it's totally eating Trade Desk's lunch. So definitely a name to keep a close eye on. It's not as, compared to other names that we've looked at today, it's not, it's a little bit, you could argue it's a little bit more extended, but often the best stocks, the leaders, run ahead of the industry peers, and also they're the hardest to get into. They don't really give you opportunities to build a position. They'll run up and then they'll just keep running up, and that's what we've had here. This it broke out of this space and just been grinding higher ever since. And this closed this past week up another 8.1%. So AppLovin, definitely a monster stock. SNPS, this is a chip design company along with Cadence. I really like how this name's shaping up here. It's just, continued to show relative strength. It's up 0.7%. And this was one of the early leaders within this bull market. Synopsys and Cadence were among the first stocks to break out to all-time highs. You can see it broke out to new all-time highs back in May of 2023. So this thing's just been a monster, and it's been just steadily grinding higher. And if we do see a rotation back in the software stocks, I see no reason why this name, along with Cadence, couldn't do very, very well. The last name I want to discuss is Informatica, ticker INFA, excuse me. This name hasn't broken out to new all-time highs yet, but it's building a really, really strong base. I like the volume profile that's coming in here. I like the relative strength that we've seen from it. You saw a lot of software stocks, a lot of tech stocks, growth stocks get hit hard over the past few weeks and pull back, or at least chop around. And this name's just been cruising higher and is up 4.8% this past week, looking really good. It's a $10.8 billion company that I don't see a lot of people talking about. Maybe if you're a more conservative investor trader, you might want to wait for it to flip this level here and officially break out of this space here. But nonetheless, this is a name to keep a very close eye on because of the relative strength that it's shown over the past few weeks and months. Really, it's been a very strong mover that's been flying under a lot of people's radar. So that's it for today's video, and I think I would like to wrap things up by saying, in today's day and age, there's a lot of narratives float around, and often the narratives that attract the most attention, get the most engagement, are the negative ones. And so with commodities doing well and energy stocks doing well, I think a lot of people forget that we are in a very strong bull market that for much of this bull market has been led by technology stocks, the AI stocks. And so I think it'd be foolish and premature to dismiss the possibility that we do see a rotation back into technology stocks, because these stocks have been leading the market for quite some time. And the other thing I want to mention before I sign off is that if you'll notice in this video, a lot of the names I discussed were larger cap, mega cap tech stocks. And I think with what could potentially transpire with commodities and energy prices rising, we could see an uptick in interest rates. Bonds are chopping around right now. We had a sell-off on bonds this past week, and so if interest rates do rise, or at least not fall, what we could see is a flight to quality. So we could see a flight to names like Microsoft. We could see a flight to names like Google, your ServiceNow, your Salesforce. And that's because these names are proven, they're better capitalized, they're profitable, and they're just, not as far out on the risk curve as, your smaller, unprofitable software growth names. So that's why I am focused on these, high quality assets right now. So anyways, that's it for today's video. Hope you guys enjoyed it, and I'll see you soon.